Buyers up here, sellers beneath. After a while, man, you know, everybody, I don't know if y'all look at a chart like this, but you start getting to the point to where you looking at it in not symmetrical shape, but you could start looking at them in halves, like half this chart, half here. Or you may look at it, this is the mirror trick. You look at it half this way, so you break it down in quadrants. Buyers up here. Of course, sellers market down here. But what's even cooler is when you start looking at it kind of like that, not as abstract or obscure, like after you already have your analysis of where you want to run it to, then you can kind of break it up into quadrants to help you identify trend. And then I'm looking at, let me find if I can find which one is either bar patterns or ghosts for you. But then you can kind of measure movement from low to high. That's kind of an impulse, but I may want to put that number from low to high. You take your ghost feed, mirror or flip. Oh yeah, you flip that baby. Voila, you kind of got a pattern of which where the market go. So it makes sense, like me and Isaiah was saying, drop, pull back, continue to drop, go into a double bottom, probably correct a bit.
I'm not finna hold you, that was kind of cold.
I agree, that
it
was.
Clues to where currency may go by looking at other asset classes. For example, clues to where petrocurrencies like CAD, NOK, the rub. You notice how we're just one currency, not the pair. You can kind of get an understanding where they might go by just looking at oil. So if oil's going down, CAD's gonna be going down because they tied to oil. So I'm already knowing the elements of what makes a successful traders or a robust trading system. You want to kind of understand market, what would I call it? Market conditions. And it's another word for, I wish my boy Isaiah was in here because he said it yesterday. But it's basically how the market is flowing. So there's things that we use, like personally, I trade what we call VSA, it's volume strength analysis. Then there's a theory that we've been learning called the Wyckoffin logic, Wyckoff. They speak about accumulation and distribution in the market. That's basically how the market runs. You're going to have phases of accumulation, distribution, and you're going to have impulses. There's no market without consolidation. So you start learning like, okay, we had a push up, we get consolidation. Is this going to be a distribution phase, or is this going to be a re-accumulation phase for another push up higher? That all in ties with supply and demand. So there's three laws in the market. There's a law of cause and effect. There's a law of supply and demand, and there's a law of effort versus result. When we're speaking on either what we call Dow Jones or the Wyckoffin logic. In our EDU group, I'll share it out to the public soon. There's a video that we've been going over called Trading in the Shadows of the Smart Money. It just goes over that the market's been the same thing for hundreds of years. Before there was computers and everything was automated, these guys used to trade this same way using just price, like the order book. But they had this concept that was those three laws. It was accumulation, distribution. So we're gonna jump into supply and demand. It's vital. Back in my earlier days, I got YouTube videos where I gave a in-life concept of supply and demand. We look at like a convenience store owner owning, selling bottles of water in a water crisis, how the price rises and how as more vendors get bottles of water from a warehouse, the price comes back down. It's going to be typical real life example of supply and demand. So when we look at supply and demand on a chart, and I'm not finished with this, but we got a couple of key things. So first things we want to find the structure of the market. What is the supply and demand zone? How to find the supply and demand zone, different types of zones, how to measure it. When does the supply and demand zone actually break? Or you can have a flip. how to trade with supply and demand zones, and then enhancers for that supply and demand zone. So we got structure of the market. We were just talking about accumulation phase, reaccumulation. You have the impulse of the uptrend distribution.
Summer, winter, spring, fall. The market is not accepted to that. So we trade currencies, but we'll look at, like, to break down an example, let's say corn. We all know, corn has its seasons of growing, and that is a tradable asset as well. But it's going to move different in the summer months compared to the winter season.
Right.
So you have ideas of, okay, during the summer, I can expect it to react in this certain way, and maybe even this specific strategy is going to work fine. Maybe I can run a trend trading or trend following strategy during these months. During the winter, we may want to swap that up a little bit, or you understand, like, we're kind of going through